Hi traders and welcome to the Technical Analysis Market Watch on Friday the 6th of March. So we've seen one of the most action-packed weeks of the year with all of the turmoil that's happening obviously overseas, and the markets have really reacted. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. Alright, so we'll start out here with the Aussie USD, which is one of the more popular ones that we get requests for. And look, we can see that we're obviously starting to see quite a little bit of weakness go through in the daily chart. You can see we've had effectively all of this week has been a little bit up and down. We've got very big wicks that you can see right through the daily candles, but today's candle in particular has been a very solid sell-off. And if you go to the smaller time frames, I mean, look, we've obviously broken through the 20 moving average, which is quite significant in its own right. But we can see if we go to a smaller time frame, the cycles were starting to happen. You could see we basically worked up to the top. That was no problem. But then we started to cycle down. And when we saw that eventual break of the moving average down here, down it came, tested it with a big doji candle, and then down she came again. And then what it also did, it came back and tested the role reversal zone on the way down. And, of course, another little sell-off there. So if you're trading it and scalping it, which is probably all you want to be doing right now in a very, very volatile market, of course, you want to be really careful in terms of how you trade it. But the short and sharp attacks at the market are the way to go, because they're the ones that are going to get you in and out in a very effective manner, and also probably keep you out of a little bit of danger of very, very heavy volatility spikes. But look, even in a volatile market, you can see that we still get the opportunities that we're always looking for. The pullbacks to the higher high and higher lows, or lower high and lower lows, and attacks at the 20 moving average. So really, really good defense here. Look, it's one of those ones where 70 cents is a round number. We know it's support. We know it's going to be heavily defended because it did a lot of work to get up there in the first place. So realistically, if it's going to turn around, this is the end point for it. If it turns around from here, then we're going to start looking at that sort of 70, 80 to 71 level again as a target on the way up. But of course, if it rolls over from the 20 moving average, or even from here, if it fails to get to the 20 moving average again, that 69.20 area would be the target on the low side for the Aussie. So, but weakness starting to creep in. You can see the moving average is starting to drop as well. We'll go over to the dollar index. The all-important dollar index has been very, very strong. Look, it's had a very strange week, obviously, but at the same time, it was already heading up. We knew we had a lot higher high, higher low sequence already. All it needed to do was break this zone, and it did that, and it did that well. A big spike up earlier in the week where we got to 99.70, and then it did pull back to effectively the role reversal zone. And you can see we've had a pretty good solid day's trading today. We can see that we've seen a decent move up. Still a little bit more to go in the session, of course, but for the most part, it's been pretty strong. Again, if you go to a smaller time frame, you're going to see the sequences that we're always talking about, the higher high, higher low, two opportunities there, and then off it went. Of course, the big moves are going to, the trading's going to happen on the euro, which we'll have a look at in a second, but it did reach the initial target, and the euro is the one that you would have traded. As you can see, it hit the support zone that we would have expected here around that 115.50 area. It's hit it twice this week, really. Well, it hit it in the big spike, and you can see that reflected in the dollar index reversal. But now we're about to get a 20 moving average cross again, and the last session was fairly weak. I think that the majority of the momentum is obviously down. So really what we're looking for is a continuation there, and we're looking for a move down to around that 114.60 to 70 area, which is this support zone here. The ideal one to trade, when the markets are moving, when you're using the dollar index as the mainstay, is going to be the euro, of course. And we can see that it's obviously moving in the direction that we want it to. But that said, we're in a very volatile time, so you want to be careful that it doesn't reverse on you really sharply. So only trade with conviction where you are very confident that you can stay with the market and watch it, and keep your stop losses very, very sensible in these sorts of scenarios. But if we get a roll over here and it starts to push up again, the moving average would be the target I'd be aiming for, and that'd be around that sort of 117.20 area, and the moving averages will catch up by then, because you've got all of these highs here to help bolster that. So pretty good on that regard. S&P 500, look, of course, another strange week. The 20 and 50 moving averages are all but crossed. You can see here we're about to do it. It did try very, very valiantly to stop that cross happening. We pushed up higher 2 days of this week, and you can see now that the last session has been a very, very heavy selling session. Not many wicks, even though the previous days were. Again, look, there's a little bit more to go in this session, so it's not going to be a massive surprise to see it pull back a little bit because it's done it every day this week. But we have to trade what we see, and we know that the support is at that 67.50. It's been extraordinarily strong support for quite some time now, so we can trade relatively confidently at that level that if it does get there, it might find the support. If you are actually shorting the market and you're looking for a target, that 67.50 would be the first point of call, because we know there's a role reversal there. Doesn't mean that it's not going to go past it, and I think that if the turmoil continues, or say the job numbers, we do have non-farm payroll tonight as well, of course. So this is a lot of movement in a non-farm payroll week. Generally, we're a little bit quieter in a non-farm payroll week, but this is a lot of movement for non-farm. So we must keep that in mind as well. But if we do get, maybe the numbers are ugly, or maybe we get, even more bad news from, what's happening in the Middle East, then, that level could crack. And if it does, the move could be quite substantial, all the way down, in my mind, probably to around that 65.50 area. That would be the next target, so 200 points from here. So if this level doesn't hold, there's a strong possibility that we might see a bigger move for a couple of 100 points. If, however, we reverse here and we start to go a little bit sideways, which is what's been happening really over the last little bit, then we'll look at a move back to the moving averages in the middle of this channel as well as the target for that little mini long, and that's around that sort of 68.70 to 68.80 level. So really, really strong on the S&P 500 moves in terms of maintaining the boundaries, but just be mindful again that there's been a lot of conjecture here, and really the candles have effectively run in the same range nearly, apart from the outlier candle there. The majority of these candles this week have actually had very similar highs and lows. Even though some have been green, some have been red, the actual trading zone inside them has been very solid. So just keep that in mind when you're doing your analysis and looking for your moves. Gold's doing its, it did its push up to the 5,400, so I know a lot of people got that trade, which is great because it was our target, and we were very happy to see it get there, regardless of the circumstance of why it pushed up there. The target was there because it was already moving higher lows anyway. So as we often know, news does generally push in the direction a lot of the time of the momentum anyway, and it did that. It's pulled back to the 20 moving average now. Look, this is a level around that sort of 5,100 that has been a relative mainstay. You can see we had a lot of price action around through this level here, so no real surprise that it finds support at the 20 moving average, but it's still a long way from at lower high, lower low, and looking for opportunities to short it. I wouldn't be looking at taking this one short for a little while until we actually get that lower high, lower low on a bigger time frame like the daily. When we get that, that's a different story, and then we're looking around the more sustained levels here. They're all recent, so we've got to be mindful of that as well. But around that sort of 46 to 4,700 would be the big push down. It's still quite a bit away, and it's got a lot of work to do before it actually does that. It's got to close below the 20 for a couple of days for starters, and then give us a lower high, lower low. So until it does that, we're looking for long opportunities, and whenever we see a high low on a smaller time frame, we'd probably be aiming for that 5,400. So pretty straightforward there. Another one is oil that obviously this has been the one that's been affected the most this week. This is where it's oil that's going to be really fluctuating heavily on every bit of news regarding the supply and obviously the demand, and really the cutoff of potential oil supplies is going to make the oil price spike, and it's big. These are one of those situations where you do have to really pay a lot of attention to the news, and the technicals really probably play second fiddle here, because really nothing's going to stop the price going up if the supply chain gets impacted significantly, which it looks like it already has. That's a very, very big move. If you were long already, you'd probably be out by now, unless you're very, very confident it's going to go to the hundreds like a lot of people or analysts are predicting. But it was already on its way up. It was already higher low sequencing, and it broke that zone even prior to the the breakout of tensions, you can see here that we've already seen that break of that move. So really, it's not a massive surprise that it went up anyway. Obviously, we couldn't have known it was going to do that. We couldn't have known what was going to happen. But that said, I would be very, very careful about oil. I think that the best advice I can give you on oil right now is to be really, really careful with it, because the fluctuations are going to change on events, and events can't be predicted. So just be really, really careful if you're trading it. I wouldn't be personally, because I think the volatility is just too strong. But if you feel that there's a move longer, or maybe a stabilization of it, just keep your stop losses really tight on it, just to make sure that you don't get whipsawed in what is a very, very volatile market. So let's not forget today's non-farm payroll session coming up. So probably a little bit of flatness happening over the next 24. I hope you've had a great week's trading. There's been a lot of good opportunities in terms of movement. Hopefully you're able to take advantage of some of those. Have a fantastic weekend, and I look forward to seeing you all next week.